Okay. So we are starting with the merits of partnership, right? Yesterday we completed till the different types of partnership and admitting a minor into the benefits of partnership. So we start with the merits of partnership. Number one, again, as in the case of all other non-corporate entities we have seen, partnership is also very easy to form. Okay, so all you need is an agreement between the partners, and there's not much expenses involved in that, and registration is not compulsory. Even if you choose to register yourself with the registrar of firms, even that is not going to cost you much. So your formation is very easy in case of a partnership firm. Moving on, you come to pooling of financial resources. As I already told you, many partners come together for a business activity. Each of them can bring in their own financial resources, which means collectively your capital will be much more when compared to a sole proprietorship business. So more amount of capital means you can do a business in a larger scale, and it will help you to earn more profits. If you want even more amount of capital, you can also try and involve more partners, right? Next is pooling of managerial skills. Again, like in the case of financial resources, each of the partners will come with their own skills also. So different partners will have different expertise, and each of that expertise you can use for the betterment of your business, right? Next thing is balanced business decisions. Again, here all the decisions have to be taken with the consent of all the partners. All of them have to sit together and unanimously come to a conclusion. Only then decisions can be taken. Decisions cannot be taken by one or two partners without consulting the others. Next is sharing of risk. So in sole proprietorship, however much risk is there or loss is there, everything should be borne by the sole proprietor himself. But in case of your partnership, risk also will be shared in an agreed ratio, right? So you need not lose everything in the business itself. So risk also will be shared on a predetermined basis, that is an agreed ratio between all the partners. Next thing, privacy. In case of your partnership firm also, the law does not require you to publish your books of accounts. That is your balance sheet and everything. You need not publish it. As a result, uh, the affairs taking place in the business will always remain a secret within the business, and the partners are the ones who carry out the significant decisions, so there is no chance of leaking any trade secrets. Next thing is division of work. Obviously, more people are involved. You can divide the work of running the business among all the partners. So division of labor is possible only in case of partnership. Next thing, we come to your limitations of partnership. Number one is uncertainty of existence, because you don't have separate legal entity in partnership. That is, business and the partners are one and the same. So if something happens to the partners, or one of the partner retires, or they become bankrupt, or they become, insane, in those cases, your partnership may come to an end. Furthermore, we have already seen that in case of a partnership at will, at any point of time, if a partner does not want to continue with the partnership, he can state his intention to do so, after which the firm will be dissolved. So that is the point in regards to uncertainty of existence. Basically, business exists as long as the partners are willing to continue the partnership, as long as the partners are well to do the business. Next thing is unlimited liability. So, like in the case of sole proprietorship, partner also has unlimited liability, which means for the actions of the firm, for the debts of the firm, you will be liable even with along with your personal assets, right? And your liability in case of partnership is called as joint and several liability, which means, let us say A, B, C are partners. Okay, A did a transaction. He borrowed, let us say, 10 lakh rupees for the firm. Right. Now the firm is unable to repay the money. The business assets comes up to rupees 5 lakh. For the remaining 5 lakh, the personal property of A, B, C can be taken away by the debtor. Okay. Who actually borrowed in the name of the firm? A. But A does not have personal assets worth rupees 5 lakh. So the debtor can go and take that 5 lakh rupees from the personal assets of B and C. B and C cannot say that A borrowed for the firm, go and get the money from the assets of A. They cannot do that because they are joint and severally liable for all the debts of the firm. Doesn't matter who actually contracted the debt, which partner actually contracted the debt. Understood? Yes. All right. Next is
Yes.
risk of disharmony. Here, what is the problem is that, as I told you, you need to take all your decisions unanimously, which means all of them should sit down, discuss, and come to one single decision. But in most cases, that is not possible, right? In most cases, partners will have different, thoughts. They'll have different opinions, and if each of the partner is very rigid, they're not, coming to a conclusion unanimously, then it'll be difficult to take decisions in your partnership firm, right? So there may be lack of harmony, which may paralyze the business, and it may also cause conflict and mutual bickering. Next thing is difficulty in withdrawal or blocking of capital. We've already seen that you cannot transfer your interest in the partnership to another person, right? So if you want to withdraw your capital also, you need the consent of all the partners. So if you're wanting to withdraw the capital, it necessarily means that you're leaving the partnership firm. To leave the partnership firm, you have to get the consent of all the partners, and only when they agree, you can leave and you can take your capital along with it. They settle your accounts, you can take your capital and move out. Okay. So there is no, feasibility of removing your capital easily, you don't have liquidity of investment. What is liquidity, ma? Deepika, you're talking? Unmute yourself and talk, ma. I'm not able to hear you. Anybody else?
Ma'am, na பேசுறது கேக்குதா?
Harun, you are audible. I think Shivan is also audible. He spoke some time back.
Ma'am.
Yeah, you're audible. Only Deepika has a problem. Right. What is liquidity? Others? Deepika, you can join back.
Liquidity.
Yeah.
Easily convertible to cash.
Very good. Yes. So your investment is not easily convertible into cash in case of your investment of capital into partnership firm, which may discourage people to enter into partnership business. Next thing is lack of institutional confidence. So what is institutional confidence is that basically to be able to get the confidence of various institutions like banks and other financial institutions. So, as in case of sole proprietorship, also, you don't publish your accounts to the public, right? And you're not getting regulated yourself by under any law. So, that is not compulsory in partnership, also, which means that they don't have much proof to believe you and your operations and lend money to you. So, if you want to get more money, if you want to get loans for expansion of the business, it's going to become difficult in case of a partnership firm because you lack the confidence of various institutions. Next is public trust also is lacking for the same reason that you don't publish any annual reports or any accounts, so they don't actually know how well your business is doing. Next thing is lack of control. So you know that leadership is very, very important. If with good leadership, you can soar heights, but if there is poor leadership, then the organization is going to ultimately suffer. So here, combined ownership means the possibility of leadership is, what can we say? It's confusing, right? We don't know who's going to take all the decisions because all the partners have to sit together and come to a conclusion together, right? So without leadership, then your operations become directionless. And in certain cases, the partners may come together and choose to appoint one person as a designated partner who will have more powers and responsibilities when compared to other partners, which means for the day-to-day activities, he need not consult with the other partners. But even in those cases, designated partners have to get the consent of the other partners when they're taking very important decisions dealing with the business firm. So that is lack of control. then there is difficulty in expansion. It is very difficult for a partnership firm to undertake modernization or expansion process because they don't have the ability to raise adequate funds for the purpose. As I already told you, you cannot go to banks, and even if you go to banks, it's going to be difficult to get them to trust your process and get them to give you loans. So apart from traditional sources like borrowing from your friends, family, putting in your own savings, you don't have much access to capital. And as I told you, if you want more capital, you can add in partners. That also comes with a limit. Only up to 50 partners you can add. Over and above that, you have to go within another form of organization. You cannot add more partners to your partnership firm, right? So this is in regards to your limitations of partnership. Clear, ma?
Okay.
Yes, ma'am.
Yes. Moving on, we come to your partnership deed. Partnership deed is nothing but your partnership agreement. Partnership agreement is essential. Without an agreement, there is no partnership. So we need to understand what all is going to make up this particular document. So partnership agreement is a document that outlines in details the duties and responsibilities of all the parties to a business operation, right? It has the force of law and is designed to guide the partners in the conduct of the business. So what all should be there in a partnership deed? Number one, you need to have the vital information, basic information like what is the name of the partnership firm? Then what is the principal place of business? Where do you have the office for the partnership firm? Then you'll have to bring in the name and address of all the partners. You give a short summary of what is the type of business, nature of business that you're going to operate. So that is the vital information should be there in your partnership deed. Moving on, if you have any duration, your partnership can be for a particular period, it can be for a particular venture, or it can be a partnership at will. If it is for a particular period or venture, then you'll have to give the date or for how much long you're going to continue with the partnership firm. So that is the second point. Moving on, what is the amount of capital that you're going to be investing into the business? And you have to give in particulars what is the amount to be invested by each partner. Okay. And then what is the profit or loss sharing of each partner? If you're going to provide salaries to partners, how much you're going to provide salaries? If you're going to give interest on capital or interest on loans provided by the partners, then what is the rate of interest? All these details should be given in your partnership deed. And then you'll have to decide on how you're going to account your partnership firm. What is the method of accounting that you're going to use? Then you come to what are the duties, powers, and obligations of the partner. So duties and responsibilities of each partner also can be mentioned, spelled out in the partnership deed. As I already told you, if you want to appoint a particular person as the managing partner or the designated partner, you can do so. By doing that, you can also set out their responsibilities and duties. And profit loss ratio, profit sharing ratio is very, very important. As I told you, you'll have to come to an agreed ratio on what basis your profit and losses will be shared between the partners. If you not come to an agreement and it is not mentioned in your partnership deed, what will be the ratio, ma? We talked about it yesterday.
Equal ratio.
Hmm?
Share பண்ணிப்பாங்க மேம்.
Yes, the ratio will be 1:1, equal, right? Next thing is withdrawal. Okay, the document must also provide for the actions to be taken in case of voluntary withdrawal or death of a partner. So if a partner is going to retire or if a partner becomes incapacitated to act, then what is going to happen, right? How you are going to settle the accounts of the outgoing partner. Even that you'll have to include. And what about the rules in regards to admission or retirement or exit of a partner? All that you'll have to mention in your agreement. Moving on, you come to expulsion. You should have a provision in your partnership agreement to expel a partner who's acting in a manner which is detrimental to the business. So if a partner is voluntarily cheating the firm, cheating the other partners, or he's not working in a diligent manner, then you should have a provision in your partnership agreement to remove the partner from the firm. That is called as expulsion. Understood? Yes? All right. Moving on, you come to banking and partnership funds. So all the money which is related to the partnership business should be kept in a separate bank account, right? Not in the personal accounts of the partners. It should be placed in a bank account which is designated for the purpose of the partnership business by the partners. Moving on, you come to borrowings. A written consent of all the partners will be required for taking loans from banks, financial institutions, or any third party for the firm's financial requirements. Then, dissolution. What about the methods by which you're going to dissolve your partnership firm? And in case of dissolution, how you're going to settle the accounts of all the partners. At last, you come to arbitration, that is, in case of conflicts, in case of issues, how you're going to manage the conflicts, how you're going to resolve the conflicts. All that should be dealt with in the partnership agreement itself, right? So, partnership deed is a written agreement between the partners. Okay, it is to be mandatorily registered in the court of law, where partnership agreement is an agreement between partners which may or may not be registered in the court of law. Right. Moving on, you come to benefits of partnership deed. So, a partnership agreement or a partnership deed need not always be in writing. Okay, it is not compulsory to have your agreement in writing. It can be in oral or written form, but it is always better to have it written. Why? Why is it better to have your
ரிட்டன் அக்ரிமெண்ட்
mm,
ரிட்டன் அக்ரிமெண்ட் பண்ணா ரெக்கார்டு இருக்கும். பட் ஓரல்
exactly.
அக்ரிமெண்ட் எப்போ வேணாலும்
Yes. So, as she rightly said, written agreement abdina, you'll have your proof, right? Later on, when there is any conflicts arising between the partners or with the outside parties, you can have the agreement as a proof to show that you're acting in the correct manner. But in case of an oral agreement, you can take back words. People will forget what was actually said. You can change or try to manipulate the agreement, what was initially made. So it is always better to have your partnership agreement in a written form. Okay. And one more thing is, drawback with oral agreement is that it has no value for tax purposes. One cannot use it as a legal document if there is any dispute. So it is always desirable to have a written partnership deed. Okay. For that, there are 5 points. You can read it for your exam purpose. Moving on, we come to your registration procedure. A partnership firm can be registered whether at the time of its formation or even subsequently. This is because the Act does not mandate you to always register a partnership firm. Registration is completely voluntary. If you want to do so, it is optional. If you want to register yourself, you can do so. So, நீங்க partnership business தொடங்கும் போதே, formation ஆகும் போதே, you can try to get yourself registered, or at any point or existing partnership business நீங்க போய் register பண்ணிக்கலாம். Understood? Okay. All right. So to register, what do you need to do? You need to file an application with the registrar of firms of the area in which the business is located. If your business is located in Chennai, then you'll have to get yourself registered with the registrar of firms of Chennai. Understood? All right. Moving on. What should the application be like? An application for partnership registration should include the following information. So basically, all the basic details like the name of your firm, name where your business is being carried on, that is your office, then name of all the partners. If you're having any branch offices, then where are those offices? Okay, full name and address of the partners, duration of the firm, if any, all that should be included. Okay. And this application should be duly signed by all the partners of the firm or by their duly authorized agents. So if there are 3 partners, then all 3 of them should sign. Suppose one person is not able to sign, in place of that person, any duly authorized agent can sign on behalf of the partner who's unable to sign. Right. Next thing is, every partner needs to verify and sign the application. So before you sign the application, you need to verify all the details, whether the details given there are true and correct. Okay. Next thing is, you have to ensure that along with the application, following documents and the prescribed fee are enclosed. Okay, what are the documents should be there? The first thing is the application. Along with that, you'll have to file a duly filled affidavit. Then you'll have to have a certified copy of the partnership deed attached. Okay, whatever your partnership agreement is, you have to attach a copy of it. And wherever you have your principal place of business, அந்த place of businessக்கு நீங்க owner, அதாவது அந்த ப்ராப்பர்ட்டி உங்களோட ஓன்னா, you have to have the proof of ownership, or if you're renting it, leasing it, then the rental or lease agreement thereof. All these should be attached with your application and then submitted to the registrar of firm along with the prescribed fees. Okay. As per Section 71 of Indian Partnership Act, states are authorized to make their own regulations with respect to the prescribed fees. So for registration, how much is the fees? It is not fixed. It is as per the regulations fixed by the state in which you're operating. So the amount of registration fee may differ from state to state. Okay. And when you're naming your partnership firm, it should be, you should be very particular with that. It should not contain any words which may express any approval or patronage. Patronage means support of the government. You should not have any name which makes people feel like you are actually an arm or a wing of government. You are supported by government. அந்த மாதிரி எந்த ஒரு ஐடியாவும் கொடுக்கிற மாதிரி நேம் இருக்கக்கூடாது, right? And your name obviously should not be very closely resembling to the name of other existing firms. That also you have to check. Okay, so once all this process is completed, you've submitted your application, everything seems to be fine and the registrar checks out everything, then he will issue you a certificate of registration and he will enter the name of your firm in the register of firms. With this, your registration process will be complete. Understood? My registration is a very important question for your exam, from your exam perspective. And for this, we also have one more additional topic which can come clubbed together, or it can be a separate question, which is nothing but the consequences of non-registration. We've already spoken about registration being optional. That is, if you want to, you can get yourself registered. But if you're not getting yourself registered, there are going to be certain problems. There are going to be certain consequences. So what are they? So without registration, there's not going to be any fine for you, no penalty and all. But as an unregistered firm, you'll not be able to do certain things. ஒரு ரெஜிஸ்டர்ட் ஃபார்மால மட்டும் தான் சில விஷயங்கள் பண்ண முடியும். நீங்க ரெஜிஸ்ட்ரேஷன் பண்ணல அப்படின்னா இந்த ஃபாலோயிங் திங்ஸ் உங்களால பண்ண முடியாது. ஸோ யூல் பி லூசிங் ஆர் யூல் பி ஹேவிங் அ டிஸ்அட்வான்டேஜ். ஸோ வாட் ஆர் தோஸ் டிஸ்அட்வான்டேஜஸ்? நம்பர் ஒன் இஸ் பார்ட்னர் ஆஃப் த ஃபர்ம் cannot file a suit in any court against the firm or other partners. ஸோ ஒரு அன்ரெஜிஸ்டர்ட் ஃபர்மை நீங்க நடத்திட்டு இருக்கீங்க அப்படின்னா உங்க ஃபர்ம்குள்ள உங்க பார்ட்னர்ஸ்குள்ள இஷ்யூஸ் வருது. ஸோ ஒரு பார்ட்னர் இந்த மற்ற பார்ட்னர்ஸ் சீட் பண்றாங்கன்னு நினைச்சாரு அப்படின்னா கோர்ட்ல போய் கேஸ் ஃபைல் பண்ண முடியாது. எப்போ? when the firm is unregistered. Understood? Yes? Okay, a partner cannot sue the firm or other partners if the firm is unregistered. That is your first point. Then, any right arising from a contract cannot be enforced in any court by or on behalf of the firm against any third party. So, third party இருந்து உங்களுக்கு வர வேண்டிய ஏதாவது ஒரு ரைட் இருக்கு. For example, ஒரு பணம் வரணும்னு வச்சுக்கோங்க. The third party is not paying you. இதை நீங்க நார்மலி கோர்ட்ல போய் யூ கேன் ஃபைட் அவுட். பட் நீங்க ஒரு அன்ரெஜிஸ்டர்ட் ஃபார்மா இருந்தீங்க அப்படின்னா தேர்ட் பார்ட்டிக்கு அகேன்ஸ்டா உங்களால கேஸ் ஃபைல் பண்ண முடியாது இன் கோர்ட். அண்டர்ஸ்டுட்? எஸ். ஆல்ரைட். அண்ட் the firm or any of the partners cannot claim a set off. That is set off na in the mutual adjustments of debt and your credit. Basically, நீங்க வந்து firm A, firm B இருக்காங்க. firm Aக்கு நீங்க கடன் கொடுத்திருக்கீங்க, அவங்க உங்களுக்கு கடன் கொடுத்திருக்காங்க. mutually you can set off. Understood? Yes. மீதி இருக்கிறது யாரு ரிமைனிங் பே பண்ணுமோ அவங்க அந்த அமௌண்ட் பேலன்ஸ் அமௌண்ட் மட்டும் பே பண்ணுவாங்க. தட் இஸ் கால்ட் செட் ஆஃப். ஓகே, ஸோ செட் ஆஃப் நீங்க கிளைம் பண்ண முடியாது இன் ரெஸ்பெக்ட் ஆஃப் அ டிஸ்பியூட் வித் தேர்ட் பார்ட்டி இஃப் யூ ஆர் an unregistered firm. Alright. So all these three are the consequences of non-registration. So நீங்க உங்களை ரெஜிஸ்டர் பண்ணல, நீங்க ஒரு unregistered firm இருந்தீங்க அப்படின்னா பார்ட்னர் மற்ற பார்ட்னர்ஸையோ ஃபர்மையோ சூ பண்ண முடியாது. ஃபர்ம் தேர்ட் பார்ட்டியை சூ பண்ண முடியாது. ஃபர்மால செட் ஆஃப் கிளைம் பண்ண முடியாது. இது மூணு வெரி வெரி இம்பார்ட்டன்ட். ஓகே, மார்க்கெட் may come as a case study. Then you come to your registration under income tax. So to get yourself registered under income tax is totally different from your registration with the registrar of firms. So under income tax, it is mandatory for all the firms to apply for registration and they have to have a PAN card. After obtaining a PAN card, the firm is required to open a current account in the bank in the name of the partnership firm, and all the operations relating to your firm you have to carry through that bank account. Understood, ma? Yes. Okay. So with this, we are completing your partnership firm also. So till now, we have completed 3 types of organization, 3 type of non-corporate entity. What are they?
Sole proprietorship,
Mm-hmm.
partnership, and
HUF, Hindu
HUF.
undivided family, HUF. Okay, so you've completed 3. All right. So next we'll be starting with your multi-state cooperative society. Before we start with multi-state cooperative society, we need to understand what is cooperative society first. Any idea?
Group of members join together inside a
Mm-hmm.
capital for a common purpose or goal.
Yes. Very good.
Uh,
Anybody wants to add
and
to that
fund
answer?
and fund for only their members, not other outsiders.
Yes. Okay. So cooperative society definition is given here. You're almost there, Shivanesh. A cooperative society is
Yes.
first of all a voluntary association. That is, people come together willingly. Okay. So here there are a group of individuals and all of them will have a common interest. They'll have common needs. They'll have to join together for the purpose of achieving that common economic interest. Okay, so their aim is to serve their members, as Sivanesh said, and also to serve the poorer sections of the society. And their basic principle is self-help and mutual help. Okay, so they will try to help their members within themselves itself. So that is self-help and mutual help. All right. So there are different types of cooperative society like farming cooperative society, credit cooperative society, housing cooperative society. I'm sure you've seen all this, right? All right. So this is the basic idea behind cooperative society. The same principle applies to your multi-state cooperative society also. So what is the difference is that a cooperative society in general operates within a particular state. So if you're going to talk about a cooperative society acting in multiple states at the same time, then it is going to be called as a multi-state cooperative society. That's the only difference. Okay. A multi-state cooperative society, MSCS Act, was enacted in 1984, which was later modified in 2002, in keeping with the spirit of Model Cooperatives Act. So unlike the state laws, for cooperative society, you have state laws. It remained as parallel legislation to coexist with the earlier laws, that is MSCS Act 2002. The Act and rules thereunder facilitates the incorporation of cooperative societies whose objects and functions spread over to several states. That is the only difference. So your cooperative society is going to operate in multiple states. All right. The Act provides for the formation of both primary and federal cooperatives. What is primary cooperative is both individual and institutional members can be there. If it is a federal cooperative, then only institutional members can be there. So individual and other cooperatives member are irukanga, that is primary. Only cooperatives together are becoming members, then it is federal cooperatives. Understood? Okay.
Yes.
All right. Okay. What is the main object? The main object shall be serving the interest of the members in more than one state, and their bylaws shall provide for social and economic betterment of their members through self-help and mutual aid. So this is your principle of your cooperative society as per section 7 of the act. Okay, இது உங்க principle இல்ல இது உங்க objective இல்ல அப்படின்னா you are not eligible for registration itself. Clear? Okay, then in section 9 of the same act, a multi-state cooperative society is a body corporate with limited liability in சொல்லிருக்காங்க. All right. In order to ensure financial discipline, the extensive provisions have been enacted. What are the extensive provisions? Number one, no part of the fund other than net profit shall be distributed among the members. So what you can distribute with your members is that only the profits from the operation. You cannot distribute any other part of the fund to your members. Is given in section 62. Then investment of society's fund is allowed only in recognized securities. So if you're going to invest your money, which belongs to the cooperative society fund, then you'll have to invest only in certain securities which are recognized by the Act. Okay. You cannot contribute to any political parties, or you cannot give any loans to outsiders also. All right. And it is mandatory to get yourself audited as per Section 70. Okay, ma? Yes. So the meeting is ending. I want one of you to send the link for the new meeting. Okay. Yeah. All right. We'll continue.